Signature Bank was a New York-based bank that had over $63 billion in assets and more than 30 offices across the U.S. On March 12, 2023, regulators closed Signature Bank citing systemic risk after a run on deposits triggered by the collapse of FTX exchange. Opened on May 1, 2001. It was founded by Joseph J. DePaulo, Scott A. Shea and John Tamberlane, who had left Republic Bank of New York. After it was purchased by HSBC. Signature Bank had 38 private client offices throughout New York, Connecticut, California, and North Carolina. It also had a specialty finance subsidiary called Signature Financial LLC that provided equipment finance and leasing. Signature Bank was known for its close ties to the startup community and its high-profile clients, such as the Trump and Kushner families. However, it also faced several lawsuits and investigations for its alleged involvement in fraud, money laundering and predatory lending. Signature Bank failed because of its exposure to Silicon Valley Bank, which collapsed after failing to raise capital amid a crypto market crash. Signature Bank was a crypto-focused lender that had a large amount of deposits from Silicon Valley Bank's customers. The bank had a high concentration of loans to startups and venture capital firms, which were risky and illiquid assets that could not be easily sold or converted to cash. The bank had a low capital ratio, which meant it had less cushion to absorb losses or meet regulatory requirements. The bank faced a loss of confidence from its customers, investors, and counterparties after the collapse of Silicon Valley Bank, which triggered a panic and a run on deposits. The bank was exposed to market volatility and contagion effects due to its involvement in crypto-related banking services, which were subject to regulatory uncertainty and cyberattack. When Silicon Valley Bank went bankrupt, Signature Bank faced a liquidity crisis and could not meet its obligations. Regulators closed Signature Bank on Sunday, March 12, to protect depositors and creditors. Signature Bank had a large exposure to crypto-related businesses and investors, and faced a run on deposits as customers tried to withdraw their funds amid market turmoil. The Federal Reserve announced a backstop plan to safeguard depositors and creditors of Signature Bank, saying that no losses will be taken on by taxpayers. The bank also had a history of legal troubles and regulatory scrutiny for its lending practices and client relationships. According to the New York Times, Signature Bank is being investigated by New York regulators for possible violations of predatory lending laws and for its close ties to the Trump and Kushner families. The bank has also been sued by investors who claim it helped a money manager pull off a $66 million fraud, and by a crypto investment firm that accuses it of facilitating fraudulent transfers by FTX exchange. Additionally, Signature Bank was involved in a lawsuit filed by Chinacast Education Corporation for fraud, money laundering and failing to stop transfers of money to a fictitious company. Their executive team have also had their fair share of scandals. Joseph J. DePaulo, president and chief executive officer, was accused of approving loans to Trump's former lawyer Michael Cohen without proper due diligence. He was also criticized for his close relationship with Jared Kushner, Trump's son-in-law, and advisor Eric R. Howell, senior executive vice president and chief operating officer, was sued by investors who claimed he helped a money manager named James T. Booth pull off a $66 million fraud by allowing him to open accounts at Signature Bank without proper verification. Vito Suska, executive vice president and chief administrative officer, was investigated by New York regulators for possible violations of predatory lending laws for charging high interest rates on loans to taxi medallion owners who were struggling to repay their debts. Thomas Kasulka, executive vice president and chief lending officer, was named as a defendant in a lawsuit filed by Chinacast Education Corporation for fraud, money laundering and failing to stop transfers of money to a fictitious company called Longmen Joint Venture. Stephen Wieremski, executive vice president and chief financial officer, was responsible for overseeing the bank's financial reporting and compliance with regulatory requirements. He announced his retirement in April 2021 after 21 years of service at Signature Bank III. He was not directly involved in any scandals but faced scrutiny from regulators and auditors for the bank's financial performance and risk management practices. The Federal Deposit Insurance Corporation was appointed as the receiver of Signature Bank, and said it would pay out insured deposits up to $250,000 per account. However, Many customers had deposits exceeding that limit and were left with no access to their money. The FDIC estimated that about $15 billion of deposits were potentially uninsured at Signature Bank. The collapse of Signature Bank was one of the biggest bank failures in U.S. history and had a ripple effect on the global financial system. It also raised questions about the stability and regulation of crypto-related banking services. Nim Cramer from CNBC did say that Signature Bank was a good investment on April 13, 2022. He included Signature Bank among four financial GARP stocks that he said were investable. He praised Signature Bank for its strong earnings growth and its exposure to the crypto industry. However, Jim Cramer also faced criticism for touting Silicon Valley Bank as a buy on February 23, 2023, just 2 weeks before its collapse. He called Silicon Valley Bank the bank of choice for tech companies and said it was a steal at its current price. He did not mention any of the risks or challenges that the bank was facing at the time. After Silicon Valley Bank failed on March 8, 2023, Jim Cramer tweeted that he still liked Signature Bank and called it very good on March 10, 2023. However, he also warned that Signature Bank could face pressure from regulators and depositors due to its crypto-related banking services. He said he would not buy more shares of Signature Bank until he saw more clarity on the situation. Signature Bank was shut down by regulators on March 12, 2023, just 2 days after Jim Cramer's tweet. The bank's stock price plunged more than 90% in one day, and wiped out billions of dollars of shareholder value. With the collapse of Signature Bank, its assets will be liquidated to pay off its creditors and depositors. The bank's depositors will be fully insured by the FDIC up to $250,000 per account, and will have full access to their deposits. The bank's shareholders will likely lose most or all of their investment as the bank's stock price plummets and becomes worthless. The bank's employees will lose their jobs and may face legal actions or investigations if they were involved in any wrongdoing or negligence. The bank's customers who used its crypto-related banking services may face difficulties accessing or transferring their digital assets as regulators crack down on crypto lending and custody activities. Stay tuned for more to come, as this story is just breaking.